Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. Lots of things happening within this market trade as you look at this cattle market. Some say things are going better than expected when it comes to cattle numbers. Where are we at prices, even though the South continues to be on the quiet side? We'll talk about some new contract highs in the August feeders, cold storage numbers. What is consumer demand going to be like as these prices continue to fluctuate? Me, of course, as you can see, is Brad with Kooima Varilek out of Sioux Center, Iowa. So let's start out talking about quietness in the South, maybe some excitement happening in the North.
We continue to have some of this disparity between the difference between cattle value in the North and the South. We've talked about it in a number of weeks, I think. The trade did develop here today, right here in my backyard. I know that 180 was traded yesterday, and I know 180 was traded today to three different packers. For the most part, this is on old crop cattle or yearling cattle, with one exception. I know that there was a real front end set of calves that did bring that. Some of those cattle are for delivery as early as next week, in one case with one packer. Most of them are 2 weeks out. There was an instance where one packer did buy a pretty good family of them for the middle of May at that 180. And I actually think 180 is a pretty good trade, especially on that calf deal. And when you look at someone that's willing to pay that for 3 weeks out, to me, well, first of all, we better talk about the South. South, limped in last week. They had some 75 earlier in the midweek, I guess. And then Friday, they finished up with not very many cattle, but they surely made sure it got reprinted and reported with some trade as bad as 173. So this morning, quiet. They were bidding 172. They're passing. I think the attitude is that they'll get 73 or 4, maybe. Maybe all of that. And it wouldn't hurt, of course, their side if the futures would rally a little bit, because they're mostly basis traders. So instead of being $10 apart, maybe we're going to be more like 6 or 7. It sounds like, Susan.
It's been an interesting week for processing facilities. First, the Madison, Nebraska hog plant has a fire on Sunday. Now, Fort Morgan, Colorado, at the Cargill facility had a boiler explosion on a Wednesday.
It just reminds me of how, so as being the old guy usually in the conversation, every day something can happen to disrupt the market, right? And now, before everybody gets panicky, this Fort Morgan news was out for most of the session. It did cause a correction. We went, I would say, market was 20, 30 higher. Got to 50, 60 lower, and then we did recover and we closed higher, as everybody that cares should know by now. We did close a little higher today. But to get to your question, Fort Morgan is, of course, a Cargill plant and kills supposedly 4,700 a day. And of course, details are a bit sketchy. The detail that we all want to know is, well, how long are you going to be down? It started, at first it was, well, we'll be down until Tuesday at least. And now it sounds like they're talking maybe 10 days. The market can probably absorb 10 days, but any kind of, particularly with supply as tight as it is, Susan. But yeah, you don't like to hear that kind of noise. Of course, everybody remembers the Holcomb fire, of course, where the packing side of really took advantage, I thought, of the producer side of the market. I don't think that that's the case this time, or the market would have acted a little worse today. So hopefully we can absorb that and put that in our bag, just so it doesn't get any to be more extended than what they're saying now.
Well, weight numbers on these cattle continue to be below a year ago, but considering the continued winter weather that's hit so many areas of cattle growing areas, it doesn't surprise me.
No, nor should it surprise anyone. You're absolutely right. And then on top of that, of course, transitioning from yearling type cattle to calf crop in the North, where these calves, are going to weigh 100 pounds less than their partners in the pen next to them that were yearlings. And the comprehensive weights, I was looking at that this morning, they just really plunged lower. Now, we're much lower than last year, by the way, okay, on that comprehensive scale. And typically we would, someplace between May 1 and June 1 is when we'll make that seasonal low on the weights, because it's just what it is. It's seasonal, because that's when the North only has calves and they're not very fat yet. But I think, to be way on pace ahead of a year ago and ahead of the last 3 years, as we're talking about, of course, there's a COVID year in there, but still, I don't think anybody would argue with me if I would say that we are very, very, very current, at least here in the North. And that's that's helpful because, I think they're going to break the cash market some, but the market is a big discount, so that ought to cushion that break, right? I mean, because they got so much of it built in already. June's at 164 something, and trading cash at 180 in the north. It can stay wide, but it certainly should help from expecting some sort of a collapse there when you're that big of a discount.
We had a cold storage numbers that came out on Tuesday. Did you see any surprises in those numbers?
No, not really. Thankfully, sometimes I tongue in cheek it. If it's up a little bit, I go, yeah, well, if you're going to export it, you have to freeze it first, and there is some actual truth to that. Or if you're afraid of a shortage, you're going to stockpile it. Are you not? I mean, so I don't see anything, Susan, that tells me that there's been some sort of real derailment here of the demand yet, at all. In fact, as we move forward here into this next time of year, where we go into heavy demand and heavy featuring and advertising for it, I'm not too worried unless there's some other black swan event that we don't know of. I think that demand is alive and well.
What about from a consumer perspective? I mean, they're watching higher beef prices and watching cheaper pork.
Yeah, I know. I get asked this question a lot, and I wish I could give you a very wise, sounds like I know what I'm talking about, kind of an answer. Demand is really, really hard to project. I do think that the demand model, like say, well, that was maybe 15 or 20 years ago, I don't believe that that's around anymore. I believe that the pork has moved itself into the part of the compartment of, we're on a budget. This is what we're going to buy because things are tight. Falls in line with chicken. Okay. And like it or not, and I think that with the growing middle class, you've moved more people into the, well, I want a ribeye, and price point isn't as important maybe to them. But I think there's a hidden little gem in here too, though, and that is the one and only good thing I can think of coming out of the COVID pandemic is that we moved the needle on hotel restaurant trade and regular retail trade, where you go to your favorite grocery store and buy a steak. I think the millennials, I grill year round. Okay,
Right.
January, right? No big deal. You put a coat on. The millennials or whoever it is that didn't have an experience standing behind a grill or cooking their own steak, or whether it's whatever this deal where you put them in water now, that's the new thing, right? I think the group that taught themselves, whether it was a YouTube video or how to grill a steak, they found out, this stuff's actually pretty good. Mm-hmm. And in a lot of cases, at least I feel this way, the one I cook is probably better than the one I buy at a restaurant. And you can do it twice at home for what it costs you to do it at a restaurant, right? And so, I don't know. I do think that has changed the little bit of the whole broad, macro demand thing, but there's a limit. You can't put ribeyes at $22 and still buy a pork chop for $1.50. It has to make some difference, but we have not seen that pushback yet, in my opinion.
And one final question for you. We talked about at the beginning of the program, some new contract ties happening for the August feeders.
Well, there you go. Good for the cow-calf man, and those of us that feed, we're our own worst enemy, are we not? Anyway, no, it's obviously with this weakness in the corn, it's certainly propelled, these back-end feeder cattle into new contract highs, and frankly, in my opinion, rightfully so. You don't kill off all these cows and expect to have the same supply of feeder cattle available. And now, across other than the Southwest, and they're actually getting the biggest moisture system that they've had in many, many months, close to a year. But across the northern part of what I'll call the cow belt or the cow calf area, they're getting quite a bit of moisture. So this whole idea of maybe retaining some of these heifers, and we don't have to place every one of them like we did last year. So, I don't think anybody in their right mind thinks that the supply is going to be more than a year ago when you go to those back feeders. But yeah, they're getting right up there, 230. Don't forget, 2014 they went to 245 though, so we're not even to all-time highs yet. So
and sounds like some of these feedlots have some extra corn, so let's try to work on getting these feedlots filled if we can.
That's amazing to me. That's an interesting little comment, Susan. Let me follow up and then I'll let you go because I know we're getting long here. But so in that last cattle on feed report, the one state that has the same number of cattle on feed as a year ago, that one and only one, Iowa. So you're looking at these big states are down 5%. Texas, Kansas, Colorado's down 11%. People say, how does it work to feed $9 corn? Guess what? It doesn't. That's why they got empty pens. So be interesting to watch it play out.
All right, we'll see what happens come next week.
Sounds good.
All right, joining us this week has been Brad Kooima. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. That's this week's Cattle Call on the Rural Radio Network.